What's up, everybody? Nate here. So in the United States right now, a lot of crazy things are going on. We currently have prices getting out of control as inflation is hitting over 40-year highs. At the same time, investors are reeling all throughout the country because the stock market and other markets are crashing. For instance, the S&P 500 and the NASDAQ recently entered bear market territory, which means there are way more sellers than there are buyers on the market right now. And the cryptocurrency market also is crashing, with Bitcoin and Ethereum now down nearly 50% from their record highs that they set all the way back in November of 2021. But that's not all. We also have the Federal Reserve raising interest rates and a possible recession around the corner. Now, I have been hearing a growing negative sentiment in the business and financial community, especially amongst new investors. Many of them are looking at our current financial and economic situation and saying that right now is not a great time to invest, and actually they want to wait and kind of ride out this entire storm until it's over. Today, I kind of want to address both of those things. Is right now a great time to invest, and how long is this whole big crash and reset and bottoming of our markets and our economy going to last for? But if you're new here, make sure to hit that subscribe button below, ring that notification bell, and sub if you haven't already. That way YouTube shows my videos to way more people around the world. And of course, you don't miss any videos here on this channel about all of the breaking business and financial news all throughout the country. So the very first thing I want to address in this video is when we can kind of expect this entire market bottom to happen and when we can actually expect the economy to start going up again. So when I refer to a market bottom, that is the absolute lowest that we can see markets go. So this goes for the real estate market, the stock market, and of course the cryptocurrency market. Right now, they are still extremely volatile, and many experts and investors have been saying that they could get even lower in 2022. Now, what exactly is driving all of these markets to essentially tank all throughout this year? The first thing is the Federal Reserve. The Federal Reserve has been battling inflation for pretty much the last 6 to 7 months now, trying to lower it in our economy. So the way that they've been doing that is raising interest rates. Now, Wall Street and the New York Stock Exchange does not like rising interest rates in our economy because this means it's a lot harder for businesses to take on debt and individual investors to trade on margin. Not only that, but rising interest rates has an effect on everything in our economy because it simply reduces demand. Now, it's a lot harder for Americans to go out and get things like a mortgage and an auto loan and pretty much anything that has to do with financing because you now have to pay a lot more for your monthly payment simply because the bank is making it harder to get money because the Federal Reserve is making it harder for the bank to get their money. I know that's a little bit confusing, but at the end of the day, what you need to know is a lot less money is circulating throughout our economy. And what that means is the stock market is going to continue to get a whole lot lower in 2022, so long as interest rates continue to go up. And the other thing that has been really driving the stock market and other markets to essentially crash in 2022 is, of course, inflation itself. Now, what exactly is inflation? Inflation is when the monetary supply of a country starts to rise. So the United States Federal Reserve starts to print a whole lot more money all at once. Typically, they do this every single year, but the reason it's a problem in 2022 is because in 2020 and in 2021, they printed a whole lot of money all at once. We're talking around 80% of all US dollars in circulation. In around the early parts of 2020, we had around $3 trillion in circulation, and now by mid-2022, there is over 20 trillion. So yeah, the Federal Reserve has been printing a lot, and that means the value of every dollar essentially goes down. Because the United States didn't really create any new wealth in that entire time, well, then you have a situation where now there's just a bunch of money circulating around and people can spend it artificially. There wasn't any real value being created. It was just money to kind of keep the entire economy afloat because remember, nobody was really working in 2020, at least during the biggest parts of the pandemic, and in 2021, things were kind of hit and miss because of things like the Great Resignation. Why is that a big problem for markets? Well, because inflation is rising so much, that means everybody has to pay a whole lot more for everything because so much money is circulating around an economy. Well, people go out and spend a lot of this additional money. Remember all that stimulus and extended unemployment benefits? Well, people went out and spent, and that created a bunch of problems like supply chain issues. And also, Americans are just spending beyond their fundamentals, whether it be for a home, whether it be for products, goods, and services, whatever it might be. People were buying a whole lot. But now in 2022, kind of the entire reverse is happening. Prices are going up because people bought so much back then that businesses can't really keep up with supply, and now we have a lot of supply and demand issues. But demand is still pretty high because of things like the Great Resignation. Americans in 2021 got a lot of new jobs. It's estimated that around 75 million millennials quit their jobs between 2020 and throughout 2021. So people were getting new jobs, and for a lot of them, they were making a whole lot more money. It was really easy for businesses to pay people more in 2021 because there was so much money circulating throughout our economy. But in 2022, the Federal Reserve has cut off pretty much everything. We're talking stimulus, and now they're raising their interest rates, which cuts a lot more demand out of our economy. So with those rising prices, the stock market doesn't like it because Americans can no longer afford all of the same things that they could in 2020 and in 2021. So businesses are naturally having a lot less sales. They can't support their business, they can't support their employees, and they need to make more, but they simply just can't afford it. So what all that means is that our entire economic climate has dramatically changed from 2021 to now in 2022. There's not as much money going around, demand is going way down because of the Federal Reserve, and you have businesses struggling all throughout the country. Meanwhile, Americans are struggling because wages aren't going up fast enough in order to meet inflation. In May of 2022, the CPI, or Consumer Price Index, that measures inflation on a month-over-month basis, went up to around 8.6%. That is an over 40-year high, and it means that the average price for goods and services in our economy was at around 8.6% higher than it was at this time last year. So then that begs the question, when are we going to see things reverse again? When are we going to see this bottom eventually start going back up again? And in order to understand what might happen next, you have to understand how market cycles work in the United States. Now, essentially, nothing lasts forever. We all know that. Over the last 2 years, everything in our economy has been setting record highs. But market cycles come and go throughout our economy, and of course in markets like the stock market. Sometimes you're going to have a time when things go way up, and that is called a bull market. When there are so many buyers and people that want to pour their money into the stock market, well, that is a bull market. Things are charging forward. Then you're going to reach sort of the apex and the highest that you can possibly go, and at that point, things are going to have to start coming back down. And the reason that they start coming back down is because when people started to put a lot of their money in, they started to get really optimistic. They started to get a little risky, and more importantly, they started to get a little bit greedy. This happens with the stock market all the time. When things are really good, investors want to keep pouring their money in. They want to put even more money in because everything looks like a safe investment. They're putting their money in behind unproven assets. They're buying just about everything they possibly can because everything is going up. Well, some of these assets are just flat out not good assets. Not every single investment on the New York Stock Exchange is good, and that goes for every single market. So you have this really high period, but eventually these businesses are going to realize that they're not making money. And if anything changes in your economy with consumer spending or the Federal Reserve or governments or worldwide global issues, well, now these businesses start to suffer, and then they start coming down into what's known as a bear market. All of a sudden, all of your investors and all of these business people on the New York Stock Exchange start throwing their money out. They start realizing that these businesses are bad, that these companies are just not strong enough in order to survive, and they pull their money out and start trading different types of assets. They go into different markets. They start to protect themselves with hedges like gold and cryptocurrency, and amongst everything else, this is when the United States government or other governments, if this happens in a different country, start start to step in and provide a lot of stimulus, which is why inflation goes up. Now, if all of this sounds super familiar to you, then you have been paying attention over the last 2 years, because this is pretty much exactly what happened in 2020 and in 2022, just a few months ago. Actually, this isn't the first time this has happened in American history. The stock market has gone through this many times in the past, and while all of those different crashes and corrections, which is around a 10% drop, were obviously drastically different, like the factors that caused them were very much different, we have seen this entire rise and fall before. People have argued that this crash, though, is very much different because we've printed so much money and the Federal Reserve hasn't been this aggressive with its interest rates and on inflation in around 20, 30, and 40 years. So I would definitely agree that this crash is different. But again, every single crash in American history is always different, and there's always different factors. That has led a lot of investors to wonder if any investment right now is safe. And to be completely honest with you, it really depends on what you consider a safe investment. That all has to do with your ideology and your mindset when it comes to investing. If you are investing for the short term, like you want to see a return on your investment of around 5, 10 to 15% within the next year or so, well, I have bad news for you. You're probably not going to see that, and you are probably just going to continue to lose money. Right now, we have a very aggressive Federal Reserve, and we also have rising inflation and a possible recession caused by stagflation around the corner. So until both of those things, the Federal Reserve and inflation, basically go away and are out of the headlines in our economy, you are going to have a really bad time investing your money if you are looking at it from the short term. Short-term gains are going to be very few and far between in 2022 and probably in 2023. The reason being is because the longest bear market that we've had in American history is around 18 months, and recessions follow pretty much the exact same timeline. They last for around a year and a half or more, so that can be very bad if you're looking at things in the short term. Once you start to see the Federal Reserve ease off of their interest rates and inflation start to naturally come down because our supply chain issues and other global problems start to end, well, then you might start to see our economy go back. It might start reversing and going upwards instead of backwards in 2023 and beyond. That basically means that we have ended that market cycle, and then we can go back into a bull market where we start getting a lot of investments, we start seeing more IPOs, we start seeing a whole lot more money circulating throughout our economy. And overall, that is a good thing for the growth of our economy, especially since we have so much money that the Federal Reserve has printed over the last 2 years. That, I think, is going to be very helpful. But like I said, until that happens, we are probably going to have really bad markets. And honestly, the market cannot bottom until the Federal Reserve and inflation eventually disappears. If the Federal Reserve is raising interest rates, well, then that basically shows that your economy is strong enough to handle them, which means that it's strong enough to stand on its own. And if inflation continues to go up, well, that is a really bad problem because it basically cannibalizes everything in your economy. When you have really high inflation, well, people need to have money in order to buy things, so businesses start paying people a lot more, but then once people have more, they continue to go out and buy more. Then they don't have enough money because there's a lot less supply because people were buying more and demand is higher. This causes prices to go back up, and again, people can't buy things, so businesses have to once again raise their wages. You can kind of see how this is a problem, and this is what's starting to happen in our economy. That issue can go on indefinitely. It's something that can always happen, which is why we have to keep price stability in our economy. But it's really difficult to do that when a lot of our inflation problems are happening overseas. Meanwhile, though, you have the Federal Reserve raising interest rates, which could create a huge problem here at home because now Americans are having a hard time affording things, but also they can't buy other things because interest rates are going so high and, well, they just simply can't afford just about anything. So more than likely, we are in this for the long haul. We are going to have problems, but that is all the bad news. Now, I want to talk about the good news. If you have a different mindset when it comes to investing, investing, a long-term mindset, then actually this is a really good thing for you. Markets are probably going to be very volatile for a very long time, most likely into 2023, because the Federal Reserve plans on raising interest rates for the foreseeable future very aggressively, and inflation is probably going to stay high until all of that demand is out of our economy and supply has enough time to catch up with demand in just about every single market. Now, it's not going to be exact, but it's got to get really close in order for prices in all of these markets to finally become stabilized. In the meantime, though, all of these assets, all of these markets that are on the downswing, from real estate to cryptocurrency and commodities and the stock market, well, all of them are going down. While the price of everything else goes up, all of these other things are crashing down, leaving an opportunity for investors to do something called buy the dip. When things start to go down, they are on sale, they are on discount for investors to now come in and buy all of the really good remaining assets that are on the New York Stock Exchange or in the cryptocurrency market or in real estate or in commodities. You can now purchase all of these really good assets and hold on to them, and maybe even continue to buy more as the market continues to get lower and lower and lower. You now have all of these assets that you can hold on to, and when the market starts going back up, you are going to be a part of that bull run, and you got all of those assets at a discount. That is actually just one of the reasons why I believe right now is a really good time to invest your money. And I know that sounds kind of crazy. You look at the markets and you say everything keeps going down, everything is losing. But at the end of the day, the market has always gone back up no matter what. Every single time we have had a stock market crash in American history, every single time any major market went down, it went back up. It may have taken a few years, but it's gone up and it's always set new record highs. If you invested in the inverse, say you invested when things are really good, well, now you're overpaying for all those inflated assets, because in 2021, think of the price of homes. They went up by 15 to 30%. If you were to buy a home, maybe you need a place to live, but also you bought a home that's way overinflated in value. The same goes for stocks. Most of the stocks on the New York Stock Exchange were overinflated in value because it was a bull run. Investors were just pouring their money into anything and everything under the sun so that they could eventually sell them for a profit. Now that everything's down, the true investors are remaining. They're starting to buy all of these assets at a discount, and then they're going to hold on to them for the long term. They didn't spend that much on them right now, but when they sell them, they're going to make a killing. And trust me, I get it. I understand that things suck right now. I understand that it really looks like our economy and our world is about to enter a recession, and that means a lot of bad things for a lot of people. But if I can offer just one optimistic piece of advice, it's that when things are really bad like this, when we are nearing the absolute bottom, this gives you a chance to make your family and your community a whole lot better in the future. You can now invest in assets. You can now do a whole slew of things with your finances to actually grow them at a really cheap time. And if you're able to do that, then you absolutely need to. A crash like this doesn't have to be bad. It's basically just a reset of your economy, and it helps a lot of people to finally get all of the gains and to start growing their wealth. If you can grow your wealth and you can hold on to a lot of these really good assets for a long time, well, like I said, you can transfer those assets in time to the people that you care about and to your community. You can essentially take all of this wealth that you built and make everything around you better if you have the right mindset. It's not about being greedy, it's about seeing an opportunity. And more importantly, it's a way for you to make more money and to have all of the things that you want happen in the world and possibly prevent things like this in the future. You just have to know how to handle your money, and that is more important than ever before in 2022. So like I said, I know things are bad right now, but that doesn't mean they have to be bad in the future. But now I want to hear from you on this issue. What do you think about markets and our economy crashing in 2022? Do you think that when the Federal Reserve stops raising interest rates and when inflation disappears, our economy will basically start going back up? Or do you think our economy is pretty much going to perpetually crash forever from this point on? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.